Imagine waking up one ordinary morning in 2025 and realizing something in the financial world has shifted quietly, but violently. Nothing dramatic is happening on the surface. Headlines look optimistic. Markets keep pushing upward. But beneath that calm, the man Warren Buffett reads first every time has finally broken his silence. Howard Marks, the man who saw the dot-com insanity building, who sensed danger before 2008, who almost never raises his voice, has just pointed to a specific danger zone beginning as early as 2026. He isn't giving you the exact day or month. He never does that. But based on where he believes we are in the cycle, the math, the psychology, and the behavior, all roads point toward 2026 being the year when the odds turn against investors. So the real question becomes, where exactly are we right now? And why does Marx believe this moment feels more dangerous than anything since 2008? This is where the story truly begins. Marx says something historically rare has happened. For nearly 16 years, we haven't had a true system-resetting crash. No deep fear, no multi-year pain, no forced humility, just optimism, rising prices, and an entire generation that has never experienced real risk. This is exactly how cycles fool people. When good times last too long, human nature flips. People stop questioning valuations. They stop imagining losses. They start assuming today's conditions are permanent. Marx calls it the most dangerous belief in finance. The way things are today is the way they will always be. But cycles don't stay still. They stretch, tighten, and then break. And Marx says we are now entering the final euphoric phase. The melt-up before the meltdown. That's why 2026 becomes the danger zone. Not because of a date on a calendar, but because of where we are in the cycle. Marx describes today's investor psychology in one sentence. Fear of missing out has become stronger than fear of losing money. This is the moment when bubbles form. People say, AI will change everything. These companies can't fail. This time is different. That exact sentence appeared during the South Sea bubble, the dot-com mania, the housing bubble, and now you hear it everywhere again. But the real twist is what Marx says next. Most people are staring at Nvidia's chart, or Apple's trillion-dollar valuation, waiting for a collapse. But Marx flips the script. He says the Magnificent Seven might be expensive, but they're not insane. These companies have huge profits, massive competitive moats, global dominance, real cash flow, proven demand. They might be priced high, but their success is real. So where is the real bubble? In the other 493 companies of the S&P 500, the companies nobody talks about, the average low-growth companies whose valuations are being artificially inflated because index funds are blindly buying everything, including weak companies, simply because they are in the index. This creates a slow, invisible bubble underneath the surface, the kind that cracks the foundation before anyone notices. Marx's message is simple. People are staring at the skyscrapers while the cracks are forming in the foundation. What scares Marx the most isn't valuations. It's behavior. Markets are driven by emotion, and emotion swings like a pendulum. From fear to confidence, to euphoria, to denial, to disaster. And right now, we are deep in euphoria. Marx puts it plainly, risk aversion is not in the ascendancy. Translation, people aren't scared at all. He compares today to 2007, banks lending to anyone with a pulse, investors throwing money into anything with a pulse, bad companies raising huge rounds, speculation everywhere. He described that time as too much money chasing too few deals, and he says those exact conditions apply again today. This is the kind of behavior that leads directly into the danger zone. Marx says this is the most disturbing behavior of all. Investors aren't just optimistic, they're rewriting reality. Negative news? They spin it positive. Neutral news? They call it bullish. Warnings? They ignore them. This psychological trick, cognitive dissonance, appeared before the dot-com crash, before the housing crash, and now again. Every time it happens, the ending is ugly. This is where most YouTube channels misrepresent Marx. They say he claims we're in the early days of a bubble. But what he actually means is, we are at the early edge of the final euphoric phase, the melt-up phase that precedes the collapse. This is when everything looks perfect. Every stock rises. Every headline is positive. Every company looks genius. Every investor feels like a legend. This is exactly the phase that makes the next 1 to 2 years dangerous. And it's why Marx believes 2026 is where the odds flip. Marx says there's a bubble nobody is talking about, the bubble in expectations. Markets are now pricing in AI perfection, earnings perfection, economic perfection, geopolitical calm, low inflation forever, lower interest rates, unlimited growth. But what if even one of these assumptions is wrong? What if earnings disappoint? What if rates stay high? What if growth slows? Marx says the market could unwind far faster than investors expect. He cites J.P. Morgan research. When you buy the S&P at APE above 23, 10-year returns typically hover between plus 2% and minus 2%. Today, the PE is even higher, meaning we may be heading into a lost decade, just like after the year 2000. This is the part everyone waits for. What do I do now? Marx doesn't say, sell everything, predict the crash, time the market. He says, you can't predict, but you can prepare. He introduces InvestCon, a war room-style readiness scale. Imagine a military DEFCON board. InvestCon 5, maximum aggression. InvestCon 4, high risk-taking. InvestCon 3, neutral. InvestCon 2, defensive. InvestCon 1, maximum protection. Marx says most investors today are unknowingly at InvestCon 4 or 5. Fully exposed, fully confident, fully vulnerable. But given today's conditions, he believes investors should shift to InvestCon 2. Not panic, not fear, not selling everything, just reducing aggressive bets, raising quality, building margin of safety, adding cash, protecting the downside. Because when the odds shift, defense becomes the smartest form of offense. Marx acknowledges something important. AI is real. AI is powerful. AI will transform the world. But that is exactly what makes this bubble more dangerous. Because believable stories create the most painful bubbles. Marx reminds everyone, the internet did change the world, but most internet stocks still went to zero. AI could change everything, and yet most AI-themed investments may still fail. This is how bubbles deceive. Great technology, bad investments, brutal losses. Marx's advice is simple and timeless. Don't panic. Don't predict dates. Don't try to guess the pop. Just understand where we are in the cycle. Cycles turn slowly, and then violently. The winners are the ones prepared before the storm hits. As 2025 unfolds and 2026 approaches, Marx says your decisions should be based on odds over optimism, discipline over emotion, history over hope. Right now, the rhyme sounds familiar. High valuations, low fear, easy money, massive confidence, blind optimism, speculative behavior, markets near all-time highs. Marx has seen this pattern twice, and both times the ending was devastating. So ask yourself, are you preparing for the future or assuming it will look like the past? Marx isn't warning you to scare you. He's warning you to prepare you. And preparation starts with one simple question. If the market dropped 30% tomorrow, Would I be happy holding what I own? If the answer is no, you already know your next move, because once the bubble pops, whether in 2026 or any time after, it will be too late to reposition. Howard Marks has spoken. The cycle is flashing its signals. Now the rest is on you.